Hello, everyone. Today, we're going to take a look at the American market, review a few instruments, and highlight the key points that I hope will help you make your trading decisions. Let's get started. And today, we'll start with the S&P 500. On the monthly chart, everything is still going according to the previously outlined plan. The levels and trends remain relevant. The previously set target of $7,500 has been reached. Now, I think we should expect a correction of the previous growth down to a test of the effort, but so far there's no sign of that happening. It's possible that the price will continue to rise without a significant correction. The volumes confirm that the growth was supported by strong buying inflows. So for now, I'm keeping my chart expectations unchanged. Next, let's move on to the daily chart. Let's mark the current high. As we can see, the price failed to break through this level properly for the second time, and it's possible this could be a manipulation, after which the asset may start a steady correction down to the $7,000 level. I consider this scenario to be the priority, but again, it's also possible that the movement will continue without a correction. I'll mark my expectations on the chart. So for those who are in a long position, there's a possibility that the upward movement could break down at this point, and most likely you'll have to endure a price drop to $7,000. I think it only makes sense to buy more after a correction of the current uptrend, since the price is currently at its highs. Next, let's talk about Google stock. On the monthly chart, the levels and trends remain relevant. Right now, the price is being held back by the $400 per share level, which also matches the upper boundary of the ascending channel. It's quite likely that a correction down to the $350 level will happen soon, after which we can expect the asset's growth to continue. I'll mark my chart expectations. Now, looking at the daily chart, visually, the price confirms my assumption that a correction's starting, but buying volumes are still much stronger than selling. Let's mark the important lower level. This will be the key level. If the price drops significantly below it and stays there, I'll expect it to reach around $350 per share, where I'll be looking for the asset's price to resume its growth. I'm sticking to my chart expectations. So, for those holding shares in their portfolio, it's quite likely that we'll see the asset's price decline in the near future. I think buying more shares right now is risky since the price is at its highs. Next up, Apple shares in their monthly chart. The trends and levels remain relevant. The price keeps rising, and I don't see any resistance at the moment. So I'm sticking to my chart expectations, and for now, I expect the price to approach the $325 per share level, after which I'll watch how sellers react at that point. I think that's exactly where they'll start pushing the price back down for a correction to the previous efforts level. Let's take a look at the daily chart. Here, the price is also continuing its movement without any visible resistance. But last time, I set a target at $305, and that was also reached. There's still buying volume coming in, so I think it makes sense to expect the price to reach the upper level one mentioned. Whether a correction will start there or the price will keep rising without a pullback, we don't know yet. So, for those who are holding shares in their portfolio, I don't see any reason to worry. Everything so far points to continued growth. I still don't see any significant selling. So, that's roughly how I expect things to play out. But if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And don't forget, we can make assumptions, but the market has the final say.